About a month ago, Donald Trump tweeted out that this is a great time to buy, and no one took it seriously. Then the market rocketed almost 10% a couple hours later. Something very similar is happening right now, and we're going to go over all of that so that you understand. We may be looking at a bottom opportunity in the stock market. The S&P 500 has been on a rampant green streak, and we may get a pullback soon. This pullback is going to create a great buy the dip opportunity on certain stocks. But this does not mean you can just buy any stock on the market and make tons of money. There are some stocks that I believe will succeed more than others. What happens next in the market could decide who wins and who gets left behind. Now let's slow it down and clarify exactly what happened and why a similar opportunity is presenting itself right now. Now, Donald Trump put out that Truth Social right here, and the stock market literally went up about 6% in 20 minutes. Now, the average annual return on invested money in the S&P 500 is 8%. And now, just yesterday, Donald Trump said very big announcement coming soon, and it's going to be truly earth-shattering. This isn't about politics, but we do have to face the facts that politicians sometimes say things that they don't necessarily mean, and they can make empty promises. However, we can't deny that last time he said something similar, it was a great opportunity to buy stocks. Now, what exactly this big announcement might be, we don't know. However, we do know that it's not about trade. Another huge reason that this might be a market bottom is that US and China are trying to come together and make a deal. Trade tensions and uncertainty have been weighing on US stocks like crazy. Now that this might let up, it might provide some relief for US market. Another big reason that this might be the bottom for stocks is the United States non-farm payrolls. This is basically how many new jobs were added in April, excluding farm jobs. So the US economy added 177,000 jobs in April 2025. This surpassed market expectations of only 130,000. So the strength of the US economy job market is better than everyone expected. The S&P 500 also just triggered a rare historical data set that's only been triggered 8 times in history. It was the S&P 500 being up 6 days in a row with a total gain exceeding plus 7%. Now it's happened 8 times through 1962 and 2010. And if we look at some of the historical statistics, 9 months after this triggered, it was green 100% of the time. Of course, this doesn't mean that the S&P 500 is going to be green no matter what 1 year from now, but if we combine all of these news pieces and indicators together, we have a pretty solid opportunity on our hands. Okay, so maybe the market has bottomed. What exactly do we do? Do we just buy the S&P 500 and relax? Well, you could do that, but I believe that there's some individual stocks and companies out there that will definitely outperform the S&P 500. But before I show you my picks, I just need to preface that please do your own research before buying any stocks. Also, if you ever want to see my picks in real time, I do have a SCOE Hypergrowth Portfolio. This is free to everyone. I don't have any paid services. Currently, in the past year, the SCOE Hypergrowth Portfolio is up almost 71%, and the S&P is up about 3.3%. The link to see it is in the top of the description. You do have to sign up with your email, but I won't send you any emails. It'll just be notifications of the moves that I'm making. Alright guys, the first pick on my list is Dave. Yes, I went over this in one of my previous videos, and at the time, Dave was sitting at around $93 per share. It's just reported earnings this morning, and now it's at about $139 per share. So if you bought from the last video, you would be up quite a bit of money. Now, I'm not saying that I'm going to go out and buy this right now. I wrote a Twitter thread explaining exactly what happened and my thoughts on it, as well as my actions moving forward. We're going to go over this very briefly, but if you want to see it in depth, you can look at my Twitter profile. It's SCOEX. So Dave just dropped a strong Q1 and is up over 25%. This morning, it's up about 29%. So one of the main highlights is that the company is becoming very profitable. Free cash flow was reported at $19 million for the quarter. If you don't know what free cash flow is, it's exactly how much money the company walks away with at the end of the quarter. So all costs considered, they walk away with $19 million in profit from last quarter. Part of Dave's business is that they give out short-term loans to consumers who are struggling so that they can give them extra cash that they need. The delinquency rate on those short-term loans is only 1.5%. Delinquency rate meaning how many consumers have trouble paying back their loans and are late. And the average consumer delinquency rate is currently 2.75%. So Dave helps consumers pay their loans on time. And it's done so with a cash AI model that helps consumers understand their finances. Cash position is strong. They have 147 million in total cash. Now this is the earnings presentation from Dave. And Dave's market is really consumers that are living paycheck to paycheck. They help them out with short-term loans as well as finance education. And the total percentage of consumers living paycheck to paycheck has grown from 57% in 2021 to 65% in March of 2025. So knowing that they help consumers who are living paycheck to paycheck, this is a subprime consumer base, meaning that they loan money to consumers who don't have a great credit score. So that is a risk that we have to keep in mind. Now, part of Dave's business model is having much lower fees and costs than other big banks. Here we can see the fees that Dave charged compared to other big banks. Annual bank account maintenance fees, Dave charges $0 compared to 4 other big banks that charge almost over $100 for each one. So as the economy worsens and consumers continue to struggle, Dave comes in and helps them out. Now, this is the first quarter 2025 financial results. If you want to know how to get here yourself so that you can understand everything and try and decipher it, just search up Dave Investor Relations. Click the first link, scroll down to news releases, and you can see Dave reports first quarter of 2025 financial results. Now, some of the highlights: Q1 revenue hits 108 million, representing accelerating growth of 47% year over year. Q1 net income reaches 28.8 million. They also raised the 2025 revenue and adjusted EBITDA guidance. So now what I'm doing. I personally have a small position in Dave, but wouldn't average up here right after the ER report. Right, guys, because it is up almost 30% this morning. Stock prices can be quite volatile after earnings, so it could drop pretty fast, and that would give us a chance to buy more. So I said that I'll be waiting a few days to see where the stock settles and decide if I want to buy more. The second pick that I have here for you guys is Hims & Hers Health. Yes, I also went over this one in one of my previous videos, and at the time Hims was sitting around $28 per share. Now Hims is at about $52 per share, so you've almost doubled your money if you bought from the last video. Hims just reported earnings as well, so we're going to go over that and what I'm doing. So a little bit about Hims if you don't know what they are. Their platform democratizes access to high quality solutions and service quality levels by leveraging technology to deliver a frictionless experience. Basically, they deliver prescription drugs to consumers without having to go through the doctor and that whole process. We're going to take a quick look at the first quarter 2025 financial results. Again, if you want to learn how to get here yourself, just search up Hims Investor Relations. Go ahead and click the first link, scroll down a little bit, and click press release. Here you can see everything for yourself, and I'm going to show you how to break it down. So first, we're taking a look at the highlights. Revenue of 586 million, up 111% year over year. So Hims is an incredibly fast growing business. Subscribers grew 2.4 million, up 38% year over year. They introduced 2030 targets of at least 6.5 billion in revenue. Another big reason as to why Hims & Hers has been up recently is because they partnered with Novo Nordisk. Novo Nordisk is a huge company with a market cap of 231 billion. If you don't know who they are, they're the supplier of the drug Wegovy. Here you can see what consumers actually see on the Hims platform. They've also just this morning announced that they appointed a new CTO that'll be handling AI operations. And this man, Mo El-Shinawi, I'm not sure if I pronounced that right. He's a proven technology executive with deep expertise in artificial intelligence and large-scale infrastructure. He also holds more than 10 patents across AI, robotics, and autonomous vehicles. If you watch my channel, you'll know that I'm a big fan of the future of robotics. Huge market. And as Hims & Hers expands AI operations, they'll continue to improve their margins, leading to more profitability. Now, personally, what I'm doing, I already have a position in Hims, so I'm not buying up here. You could definitely consider it expensive at this price. So with my experience, Hims always finds a way to become undervalued. And best believe next time I see it as undervalued, I will be posting it on the channel. But as of now, I wouldn't necessarily buy it. I would wait for a pretty significant dip. Again, this is not financial advice. Please do your own research before making any decisions. My third pick here, guys, is Advanced Micro Devices. Now, this is one I wouldn't be waiting on a dip for personally. If I didn't already have a large position, I'd be actively buying it. They reported earnings recently as well. I thought they were great, so I'm continuing to hold this name. Let's go ahead and pull up the earnings report, right? You guys know the drill at this point. AMD Investor Relations. And then if we want something a little more visually appealing, we can click on the slide presentation. So personally, I believe the turnaround story for AMD is in full effect. I also went over AMD in some of my previous videos, and at the time they were sitting around about $87 per share. Now AMD is around 105. So in their earnings report, they reported a revenue of 7.4 billion, increasing increased 36% year over year. Now the revenue growth is mainly coming from data center. Here we can see the gross margins for Q1. They improved a little bit, 3% year over year. Then the operating income for Q1. If you're a little confused, GAAP is generally accepted accounting principles, and then they also report non-GAAP. So non-GAAP usually doesn't include things like acquisitions of other companies or stock-based compensation. Investors will typically look at non-GAAP as long as there's no alarm bells, nothing shady or fraudulent going on. Then the diluted EPS was 96 cents per share. Guys, this tells me that the turnaround story for AMD is in full effect. And here we can see the data center revenue growth. It's up $1.4 billion year over year. And then the operating margin is up from 23% to 25%, which helps increase profitability. This is where a lot of the opportunity lies for AMD, and they seem to finally be executing on that. But we can't ignore the client and gaming segment. It was up from 2.3 billion to 2.9 billion, and the operating margin increased by 7%. Margin is a measure of profitability for the company. So again, guys, for me personally, I already hold quite a bit of AMD, so I'm not going to be buying anymore. But if I didn't, I would be actively buying it. So guys, there you have it. I believe this might be market bottom and a nice opportunity to buy some stocks if we did. To recap, 3 of my favorite stocks right now are Dave, HIMS, and AMD. There are of course more favorite stocks, but for time's sake, I only went over 3. I hope you enjoyed the video, and if you want to see some other stocks that I cover, be sure to subscribe and leave a like. Peace.